Hi, my name is James Peel, and this is my PowerPoint for the American Chemical Corporation case. First, let's take a look at the past performance of American Chemical Corporation. Between 1974 and 1978, American Chemical seemed to be fairly strong when it came to performance compared to other major chemical companies. At the beginning of the period, sales were fairly strong and rose throughout the period. However, other chemical companies had more rapid sales growth. American sales increased by less than 1 billion in those years. Compare that to DuPont, whose sales climbed by over 3 billion in the same period. Although sales are fairly strong, American had a relatively small net income. Their net income varied between roughly $200 million and $350 million, while a few of their competitors were making net income in the 500 million to 700 million range. Despite less than impressive net income, earnings per share stayed strong with the company, earning $8.20 per share in 1978. Taking a look at stock prices, American seemed to be a solid investment. During the period, its stock price more than doubled. At the same time, the prices of competitor stocks were generally stagnant. The only exception was DuPont, whose stock made moderate gains. Another difference between American and the other chemical companies that stands out is that the firm had the lowest bond rating of the group. This could possibly be explained by the fact that American is financed by a relatively large amount of debt compared to its competitors. As for ACC's competitive environment, the firm is in a competitive industry, but is in a strong position relative to the other firms in the industry. As a result of increased demand for sodium chlorate, several new chemical companies are entering the market around the same time, so competition is expected to increase in the immediate future. ACC is a large player in the southeastern part of the United States when it comes to sodium chlorate production. In fact, the reason this plant is for sale in the first place is to prevent antitrust violations by the SEC. When ACC first attempted to acquire Universal Paper, it was blocked by a court, so ACC had to get rid of the plant to continue with the acquisition. This demonstrates ACC's power in the regional sodium chlorate market. Although there are 12 different producers of sodium chlorate, the majority of it is produced by large chemical companies, of which American is one. A recently emerging threat to the traditional industry powers was the vertical integration of paper companies. This means that the market for sodium chlorate could shrink in the future as more and more paper companies cut out the middleman and produce the chemicals themselves. At the same time, increases in market demand could offset the new increase in supply. Aside from the major chemical companies, two specialists in sodium chlorate production could also pose a threat to ACC. However, these companies are much smaller and likely do not have the same economies of scale. To calculate the unlevered beta of the plant, we take the levered betas of the two pure-play sodium chlorate companies, then find the market value of both the equity and the debt. We then calculate the unlevered beta of the two firms and average the two values to estimate the unlevered beta of Collinsville. We then use Collinsville's debt-to-equity ratio to calculate the levered beta of the plant using an assumed debt ratio of 35%. This gives us an unlevered beta of 1.04 and a levered beta of 1.40, as demonstrated in the figure. The cost of equity for the project is a simple matter of using the capital asset pricing model, using the calculated levered beta along with historical values for the market return and risk-free rate. This gives us a cost of equity of about 0.20. Using this value, we can then calculate the weighted average cost of capital. Since both forms of debt financing carry an 11.25% interest rate, the cost of debt for the project is 11.25%. This leaves us with a weighted average cost of capital of about 0.07, as seen in the figure. Now we ask, is Collinsville attractive to the Dixon Chemical Company on strategic grounds? Collinsville is very attractive to Dixon on strategic grounds. Dixon is a supplier to the paper industry and is looking to expand into the sodium chlorate market. Sodium chlorate demand is on the rise, and as part of the same industry, it would be beneficial for Dixon to get a hand in that market. It also helps that Dixon already has operations in the American Southeast. Because Dixon has an existing client base and supply chain connections, It would be relatively simple for the company to get its sodium chlorate operations off the ground in a short amount of time. If Dixon decides that it wants to open a sodium chlorate plant, it has the option to either build one itself or acquire one from another chemical company. Acquiring the Collinsville plant from ACC would likely be much cheaper than building a new plant, and since the plant is currently in operation, it could be switched over to Dixon's hands fairly easily. If Dixon decided to build a new plant, they would have to wait for construction to complete, during which time other companies could get a stronger foothold in the sodium chlorate market. Another factor that plays an important role is the fact that American would provide technical support for the plant post-sale, including making the desired upgrades available. This means that Dixon would have to simply pay for the upgrades when available, rather than having to do all the upgrade work themselves. I would recommend that Dixon buy the plant. The plant would allow Dixon to expand into a new product market with less cost than building a new plant. Looking at the financial statements of the plant, it has seen very high operating profits in relation to net assets, ranging from 16.9% to 90.0% between 1974 and 1979. Although this purchase would put Dixon's debt to capital ratio above optimal levels, it could pay these debts off with money to spare if returns from the plant are similar to projections. Normally, costs for electricity and graphite would be a concern, but the fact that ACC is willing to sell upgrades for a reasonable price brings these costs down dramatically, so I would also recommend paying for the upgrades.